Technical analysis is based on the idea that by analyzing charts and technical indicators, a trader can identify patterns in price movements that can help inform a trading decision. One of the tenets of technical analysis is that price moves in trends, which can either be in an uptrend, a downtrend, or no trend at all, where the price is range-bound. Trend-following traders will look to identify these trends and possibly make trading decisions in the direction of that trend, with a view to exiting the trade before the trend comes to an end. However, the markets can be volatile, and there's always the potential for losses. Using technical analysis alongside fundamental analysis is one way to develop a more balanced view of the markets. When analyzing a chart, traders will typically assess the price in the form of candlesticks, which show key characteristics of rate fluctuations over a given time period. Consideration is often given to support and resistance levels, areas where price has previously reversed from or struggled to break through. Additionally, there are a multitude of technical indicators that can be applied to a chart, which can add a further level of information and insight to that provided by price alone. Popular indicators include moving averages, MACD, RSI, and Fibonacci retracements. Please like or subscribe to our YouTube channel for more trading education content.